Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Zac Prince, founder and CEO of BlockFi, a digital assets financial company backed by world-class and innovative partners such as Galaxy Digital, Susquehanna, Fidelity, and many more. Zac, it's great to see you. Welcome to Trade Talks.
Hey, Jill. Thanks for having me on.
All right, this is a big conversation as of late. How are cryptocurrencies disrupting the traditional banking model?
Sure. So I think there's two core things that are happening in the cryptocurrency space that are incredibly powerful. The first is that you have new assets that have been created, like Bitcoin, which is increasingly viewed as a store of value by some of the smartest investors in the world. And the second thing that you have happening is there are these new payment rails powered by blockchain technology, which enables the distribution of value in the same way that the internet enables the distribution of information. So when you combine these two things, you have an incredibly powerful new financial system being built right in front of our eyes. And it's a more global financial system and a more accessible financial system than what we've had today with the traditional banking sector.
Tell us about BlockFi and where you fit into the crypto ecosystem.
Sure. So we're a leading financial services provider for these assets in this ecosystem. So in our mobile app or on our web app, folks can connect their bank account, buy cryptocurrency. They can also sell it and cash out. They can earn interest on their cryptocurrency holdings. We pay really attractive interest rates on Bitcoin. We're offering 6% currently. On stable coins, which are effectively digital dollars, we're offering 8.6%. And we also support cryptocurrencies like Ethereum and Litecoin. And you can borrow dollars in the form of low-cost loans secured by the value of your portfolio that you hold on our platform. So that's what we have available for folks. We make it really easy to get involved in this ecosystem, manage your investments, and earn a yield on them in a world where rates are increasingly trending towards zero, and finding yield is very, very hard.
That is true. Let's go back to that earning interest for a moment. How has BlockFi allowed individuals to earn interest through owning Bitcoin and other cryptocurrencies? Is that through the lending process you had mentioned?
That's right. So from our client's perspective, it's really simple. You don't have to do anything complicated to earn interest on our platform. Just open an account, fund the account, and you're automatically earning interest. In the background, we are one of the largest lenders of cryptocurrencies to institutional market participants. So folks like the ones you mentioned who are investors in our company are very active in the cryptocurrency marketplace. They, as in other asset classes, have a need to finance some of their activities or borrow these assets from time to time. And they can't do that with their traditional banks and traditional prime broker relationships because those firms aren't active here yet. So BlockFi fills that role. And by lending to those institutional firms, we generate the interest that we're then paying to clients who are holding their assets on our platform.
What's the timeline for your Bitcoin credit card and how will that work?
So we're really excited about this product. It's launching early next year. It's a Bitcoin rewards credit card. So imagine that instead of earning airline points or hotel miles or regular cash back, you had a credit card where you're spending credit, everything's denominated in dollars, but the rewards currency is Bitcoin. So we're launching that early next year. It's going to work just like other credit cards that you have today, except you're going to be earning Bitcoin every time you pay for something with the card.
Oh, that's interesting. That could be actually one rewards program that grows in value versus other programs that are static. Points are points. That's interesting to learn about. Let's discuss some of the risk associated and opportunities with owning an asset class like Bitcoin.
So I think as with any investment, folks need to understand their situation and size their investments accordingly. So something like Bitcoin is traditionally referred to as being very, very volatile. It's almost scary how volatile it is. But recently, as Bitcoin has continued to mature, especially over the last 3-6 months, it's been less volatile than tech stocks. But I do think for a general investor, you should think of something like Bitcoin and cryptocurrencies as falling into a similar category as high growth technology investments where your upside is potentially very, very large. 2, 5, 10x. I mean, Bitcoin could go a long ways from where it is today, but it also is more volatile in general than things like bonds or value stocks, for example. So just understand that, understand what you're getting into, and size it appropriately based on your personal investment portfolio.
All right, Zac, appreciate the time. Thanks for joining us on Trade Talks.
Thanks for having me.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.